with that, we have an amazing guest speaker with us here today from RT Specialty. We have Michael Vanecker, who is the president of RT Specialty, and he is also a Spencer board member. So, Michael, we are so lucky to have you. Thank you for being here with us today, and I'll turn it over to you.
Well, thank you very much, Tandeka. I am thrilled to do this. I've been a proud Spencer board member for, I think, 2 years, a little more than 2 years. And when Tandeka initially reached out that it was sort of Ryan's specialty and RT's turn to present on this, and she was, giving me some ideas. She knows our organization quite well of who should speak. I'm like, no, can I do it? And she's like, yeah, absolutely. So I love doing this stuff. And Tandeka, is sort of the queen behind the scenes of all this. And a little peek behind the curtain, we prepped for about 60 seconds. And she's like, all right, I'll do the intro and all this. And what she just said, I could not impart more that, like, I do not want this to be dry. I do not want this to be the 45-minute Michael Van Acker life lessons. I'm going to do my best to not do that. But the more that you feel, I mean, we can do this however you all want. If you want to raise your hands in the middle of this, cool. Once you spin me up and I get going, I'm happy to do all this and we can talk at the end as well. So all good. And I just wanted to share how excited I am and honored to be here. This holds a special place in my heart. And I love seeing, it looks like we have a lot of Georgia Bulldogs. That's great. Some Nepal. We have Scotland. That's fantastic. I'm here in one of the rare, beautiful summer days in the best summer city in the world, that being Chicago. And you can say that about 3, 4 days out of the year. I saw a Badger as well. I'm an Illini, so that's going to be a tough one for me to get over. But all good. So anyway, Tandeka, thank you again for the introduction. And if you can monitor the chat, if there are questions, I'm trying to keep it up, but just go ahead and interrupt me here. So, I have a real passion for mentorship, for leadership, for career development, and what have you, frankly, because I've been the beneficiary of that. And I would not be where I was today without that. And I feel a sincere obligation to work both ends of that. I've been very fortunate to have a successful career that has been built on mentors within my firm, outside of my firm, within the industry, outside of the industry, and then try to take every opportunity like this to really connect with you all. And if you take nothing else away from these 45, 60 minutes, other than frankly knowing my name and knowing that I consider myself a resource, a sounding board, or whatever you need on that, I'm happy for that to be imparted as well. So I have served on the Spencer board for 2 years. I also run the Ryan University, which is our internal L&D department, a source of pride that was sort of a bouncing ball within our firm for a while. And one of the few times that I've actually raised my hand and asked for more responsibility and more work, just because I love this. And so some of you that may know RT and Ryan Specialty, our internship program, Ryan University, all that is in our realm as well, and sort of our firm's commitment to pay that forward and to really develop the next cadre of young talent that you all represent. And I did have to promise that this will not be an infomercial just for all things Ryan Specialty and RT, but I do think a lot of our ethos and a lot of our attitude and our values is shared by the industry. And again, I'm not saying that we have it all right, but I do want to touch on some of how we think about these things because I think it's so malleable and repeatable across your firm. And even if you decide insurance isn't for me, I'm not supposed to say this. I understand that, but there's a lot of things here that are just so self-evident that you can take as you continue to develop yourselves and your career. So I'm going to touch on me, how it is that I got to where I am, pitfalls that I made, mistakes that I made, and then things that helped me out in terms of going forward and building teams. I'm going to talk a little bit about insurance specifically, why insurance, my insurance story, which is a little twisted, and how I've grown to know and love the industry and all the opportunities that it provides. As I said before, I'm big on personal development, and I want to kind of double click on this, and I'll touch on my history and how this relates as well. But I threw a lot of things in quotes, and with my own, self-consciousness, do not consider these Michael Van Acker quotes. I do not have these patented, and you should definitely not listen to me on all these things. But these are things that I have thought of in my nearly 20-year career that I've always tried to impart and tried to challenge myself on. And the first one is really building your brand. And so I learned this very early in my career at PwC is someone sat me down and said, from this point forward, you now represent Michael Van Acker Inc. And he said it to all of the individuals that were there. And you can escape your brand. You might be able to change industries or change firms and try and start over, but you will be astounded that from that point forward, and I would even argue in college and high school, you have already started to build your brand and your reputation in the marketplace, in the industry. And that should not be intimidating. That should be a sign of opportunity, frankly. The amount of success that I've both enjoyed personally and the amount of success that I've had partnering with individuals that were adjacent to my network or that had a reputation that somehow got to me second or third hand or vice versa. Someone knew what I was good at, what I wasn't good at. It really like greases the skids of all things in insurance. And so I just want to make sure that you are mindful of that. You understand that even at a young age, even on day one, folks are looking at you and they are challenging you and they are candidly judging you and thinking about you. And again, that's not to be intimidating, but there are so many opportunities that you have to represent yourself in the most positive way. And so I just encourage you to think about that really nearly every single day. And there are always, folks are always looking for talent. They are always looking for individuals that can succeed and do things that they need help with. And from the moment you step foot in an insurance carrier or a brokerage or wherever you are, you're building that. So just make sure that you are aware of that and thinking of that, which ties right into my next one, which is my, I'm skipping around a bit, but my career when I first started at RT Specialty, I was basically employee number one on the corporate side. That team is now 800 to 1,000 individuals that I work with various degrees of closeness. And when I took the department from one to two, how did I find that individual? I went to my network at PwC. I went to my intern that I had mentored formally in the mentorship program. He was nearly in tears when I left because he thought I was going to be with him on day one and this was going to be so fun. We worked hard, but we really enjoyed each other, had a great culture. So I called him back and I go, hey, great news. We get to work together again. I have a spot. I'm struggling over here. Come on over. And he goes, yeah, I don't like capitalism anymore. I don't like business. I'm going to go be a teacher or volunteer or what have you. I said, okay, God bless. Do you have any friends? And sure enough, his partner at intern that had grown with him was referred to me. That was employee hire number two. Number three was an individual where I went into my collegiate network, was looking for the smartest individuals, got two referrals. That became number three. Number four was a referral from our CFO at the time. Her daughter went to school with another gal who was a rock star. You got to meet her. Interviewed her, had no idea what she was going to do, realized she was like-minded, wanted to be challenged. Another piece of advice, hire people smarter than you. Brought her on board. She's now the COO of RT Specialty. All of these things would not have happened if those individuals were not building their brand, had not done well by the folks that they were working for, and had a reputation to where my interview style, candidly, it's called a vibes check. I get tons of resumes. Everyone here is smart. Everyone here is very accomplished and what have you. And it sounds silly and stupid, but what separates people? Their attitude, their infectiousness, their willingness to work and adapt. I will hire that all day and figure out roles and responsibilities from there, candidly. And so making sure that, I tried to leave PwC on the absolute best of terms. I've had 1,000 jobs at Ryan and RT Specialty, never burned a bridge, tried to leave a team better than when I left it, and has been a real source of pride for me and our team. Being invaluable is sort of self-explanatory. Sometimes that means back in my old days, that was, getting the coffee or doing data entry, but then really trying to find a way where you can respectfully challenge the status quo and figure out where your experience, your diversity of experience, you bring a new level of insight to this industry. Where can you present that in a way that shows that you understand what are the goals, what are the struggles of the insurance industry or your firm in a way where you can add value and build something that you are the linchpin of, to where frankly they can't get rid of you and they want to trust you and let you build something, is something that is key and exciting as well. And again, another thing that I think insurance does a really good job at. Specialization is a good thing. All right, so this is something where I had to learn this because I was not good at this. When I was at the University of Illinois, I started as a finance major because there was no business major. You had to pick some specialization. I spent the first 5, 10 years of my career trying to avoid being pigeonholed. What did that mean? I picked the broadest major I could. It was finance. I eventually added an accounting degree. Instead of going to an industry firm, whether in insurance or out of insurance, I went to a public accounting firm to start because I wanted to be as broad as possible, and they talked about how marketable that was. And I was arrogant enough to think that, I needed to be so broad so that I could position myself wherever I wanted, whenever it was I figured out what I wanted to do. And for the record, I still haven't figured out what I want to do with my career. But what I learned then is I'll never forget when I interned at PwC and then was fortunate enough to receive a full-time offer. When you received a full-time offer, you then preferenced which industry group you wanted to be in. Well, so what did I do? I picked the broadest industry groups I possibly could. Everyone wanted to be in the finance banking realm because of what I sort of described before. You could go anywhere with that. Then I preferenced, the more consumer industrial goods because that there will always be those firms there. And then yours truly, in his start class of 12, was the only individual that did not preference the insurance practice group dead last. Well, what happened because of that? I was placed into insurance because I had preferenced that 4 out of 5. And my partner at the time, I'll never forget, sat me down on day one, gets real emotional and goes, "Oh my gosh, Michael Van Acker, I've heard so much about you. You are the one that understands insurance, and you preferenced insurance, and you're the first one in 10 years that has preferenced and wanted to be in my group because you must understand that insurance is the grease of all economy. It's been around since the Roman times. Society would be lost without insurance." And I'm like, I did not have the heart to tell him, "Hey man, did not exactly want to be here, but I guess we'll try this out." So that's another thing where I realized instead of fighting that, I realized that insurance again was so broad that I wasn't specializing in anything. It took me 3 years to even be able to spell premium or risk. But you then start to go deep and to become an expert at something, which ties into being invaluable, right? There are a lot of smart individuals. There are a lot of people that can do a lot of different things. My story is to make sure you understand the diversity of opportunities into insurance, and then you're never limited once you start going deep, but once you start going deep is where you can start really adding value even at a younger age. Otherwise, candidly, I think you're going to be part of the masses that are, a first year, a second year. And I just know, just based on looking at your LinkedIn and your resumes, that like you all represent sort of the cream of the crop. And then it's your job and goal to stay the cream of the crop and stay at the top and candidly stay ahead of your peers, just because I think that's the opportunity in front of you. And then I touched on this last item, and I'm very proud of the team that we have built now. We have men, we have women, we have folks younger than me, we have folks much older than me on this team. We have folks all over the country, all over the world with different backgrounds. But the unifying fact with our team, while we have diversity of experience and diversity of backgrounds, we have the unification of we really do like working together. Now, that is different from going to work every day and liking what you're doing every single day. I'm not going to be Pollyannish about that. But having been on fantastic teams and having been on awful teams, even the worst gigs, the worst engagements, if you have good people and you're in it together, my gosh, it makes it so much better and so much easier. And again, part of my history has been doing acquisitions and integrating folks. And you hear, you read McKinsey studies, you read business books about culture, culture, culture. My gosh, is it true? If you have a rotten egg that might be the best individual contributor or the smartest individual, they're going to get exposed. They're going to not have the opportunities that I'm trying to impart here by, being a good person, being likable, being empathetic. I don't care if you're in insurance or in your accounting 304 or risk management 441 class. I'm sure you all know that now, but I'm just here to tell you that is even more real, especially in the business world. All right, so quickly about myself. I am Chicagoland, born and bred. Went to the University of Illinois. I gave you the story about PwC. I still have those nasty three letters that follow me around, CPA. I try to hide that, frankly, because then everyone asks me for tax advice, and I can't even do my own taxes, so don't go there. I have three incredibly robust children. I call them my lunatics. And a quick aside about like the diversity of the insurance industry. We do a lot of recruiting at Ryan and RT Specialty. I've hired for a lot of jobs. My peers have hired for a lot of jobs. And depending on where you are in the risk management experience and where you're looking at firms, I joke my oldest, who's on the far right, he is extraordinarily analytical. He taught himself how to read. I taught him Excel, and he thought this is the coolest thing ever as a 7-year-old doing God knows what in there. He is my underwriter. He's going to be the one that thinks about this, prices it, risk. I can already tell. The individual on the left is Reagan. This is probably the only time in a year that she combed her hair in this picture. She is people person, beats up her brothers, the real psychopath of the bunch. She's a wholesale broker. She's not going to take any S from anyone, and she's going to be the best at what she does and what have you. And then the middle one, that's James. I say lovingly that James is probably going to be like an event planner, and he's the one who runs into walls. He is, I think I can. He's a big dumb jock. So he's going to just be the sports, the athlete. We're going to make sure he, goes to high school and all that sort of stuff. We're still trying to find his path in the insurance industry. But anyway, I talk about them a lot because, when I was growing up at PwC, it was all about work-life balance, and that was really something that almost became pithy and it didn't really mean anything because everyone said it and no one lived it. I grew up with that. I was imparted with that. I work with millennials, Gen Z, and I work with a lot of boomers. And there's a lot in between, and I try to empower that balance. If I'm here in Chicago, I get here super early. I get my work done. I'm on the earliest train I possibly can. And if that means I have to hop on later to do what my team calls Van Acker round two to keep things ready late at night or what have you, I'll do that. But that's the balance I need to be a good dad and also a decent professional. One of the things that, again, I want to impart, and apologies if this sounds preachy, but I've found in my career and others what I call sort of the rule of three. The rule of three is, again, I don't care what industry you're in, I don't care what firm you're in, I don't care if it's in insurance or without, but I want you to have this in the back of your head. In my opinion, especially those of you that are as talented as I've been led to believe, is that your career, I expect, could and should be on sort of 3-year cycles of development. And my career, I put these years up there to sort of show that that just naturally happened. I wasn't necessarily seeking this out, but this is how it worked. Year one, whatever job you're in, you're not going to know anything. You're going to be next to useless. You might even be annoying. As long as you have that positive attitude and that ability to be a sponge and absorb, people will keep you around, and those good managers and good leaders will invest in you because it will eventually pay back to them. Year two, you start to find your path. Maybe you're starting to find how to be invaluable. Maybe you're changing some things that aren't working. Maybe you're doing something differently. Maybe maybe you have a first year below you that you're starting to mentor. That's great. Year three, you've kind of figured it out. And candidly, I would never say I was coasting, but things run themselves if you've done it right. You've supplemented your skill set. You've recognized where you're weak and found folks that are smarter than you. And fortunately, unfortunately, in my career at Ryan Specialty, this was not of my doing. I've made a career of really, whenever there's a fire, whenever there's something that isn't working right in my firm, Van Acker gets nominated. And so what's that's good and bad, right? I've had a lot of opportunities to advance, but that 3-year cycle has been reset for me. And I take that as a source of pride that in year three, when people start to notice, like I said, everyone's always watching, that, oh, that department that was a disaster, we don't hear about that anymore. Oh, that team that was a complete mess. Oh my gosh, they've hopped into our top five, top quartile, what have you. What's Van Acker doing? He must be bored. Oh, let's throw him over here. That's what's really happened here, and I've really fallen upwards, which has been again a source of pride. But if you're not being challenged in that way, if you're doing the same thing in year three as year one, that's on you, and that's on you to make sure that you're well. It's a shared item. That means you probably have a bad manager because they're not challenging you, they're not seeing your growth potential, but it also means that you're not seeking out that diversity of experience. You're not challenging yourself. I'm not saying you have to jump firms every 3 years. I'm not even saying you have to get a title change or a promotion every 3 years, but I do encourage you to explore and make sure that you're challenging yourself to find that new opportunity because I've had a 20-year career. I expect it to be 40, 60. I also get bored. And so I want to feel invigorated. I want to feel like I'm adding value. Seeking that out or being offered that, I just think is key to your own development and what have you. So I said before, I've worked with a variety of individuals of all ages, locations, what have you. And my team, I have a very young team, but I also have a few, frankly, veterans that I lean on constantly. And my style has always been one of servant leadership and humility. I've had a lot of individuals that perhaps we've purchased or partnered with a company that has been doing business for 80 years. And a lot of those individuals that built that company may have ended up reporting to me on day one. And I get painted with the brush of young, arrogant executive. He's going to be an a-hole, blah, blah, blah. And I have to fight that. And the way that I fight that is with genuineness and humility, which is to say, I'm very good at this. You're probably very good at this. My job is to get completely out of your way and to empower you to continue doing what you are doing. And if I can help in any way, great. By the way, I do need these two or three things for the greater goal that we're trying to solve. But I'm meant to be an empowerer and a enabler for folks to develop and continue. And that has served me well. And my team, the young little mouthy members of my team call me the youngest boomer because I grew up very quickly and am not skipped some of the development technical cycle. And so I was very, very proud of myself that I figured out how to go to, we use Copilot and dropped in just give me the top 100 ENS words and a word cloud and threw it up here. And I was just interested to see how this sort of came up in terms of what it emphasized. And again, not to be a commercial for the ENS side of the marketplace, but Ryan Specialty and RT focus on the ENS side. Now I'll touch on that a bit more, but I love seeing some of the more bespoke items in here. I even see like breweries and tailored and normalization. You'll see specialization sprinkled all throughout here, kind of back to my message before. The more specialized you are, the more you're at it. You're the expert. Folks have to come to you for an answer, for advice, or what have you. That will always serve you well. We talked about diversity in terms of the teams that we've built and the individuals that we work with. We have a lot of brokers, sales individuals that are placing insurance policies. I'm in front of a lot of our clients' execs all the time. And the number one complaint that we get as a firm is that, we love RT Specialty, but gosh, you guys are exhausting. There's dozens of your folks running into each other in our halls. Can you guys just like organize that? Maybe send like one person in or one person at a time, and we go, oh yeah, yeah, yeah. And then we end the meeting and we go, all right, nice. We're flooding them. We're getting everyone in front of them. Why do we do that? We don't do that to be annoying, but we do that because the connections that we make, we want to show all of our people, all of the diversity of skill set to make what connection is needed. Back to my point of clients, individuals work with people they like, that they want to work with. We don't want to dictate that as sitting in the corporate home office. We want those connections to be natural. Insurance is based on trust. Insurance is based on relationships. That's how we foster that. And again, I would take that ethos into your day-to-day, whether it's in your internal world or with your clients or soon to be partners or what have you. It's been a great sense of success for us in our company. I talked about being falling upwards and getting promotions, frankly, before I was ready for any of those, which is extraordinarily intimidating. I've chosen to exemplify that with again an air of, I hope, humility and the imposter syndrome. I still have it every single day. I remember when I joined Ryan's Specialty at 24, 23. It was a startup and it was a bit of a F show. And so within day two, I received a call from the Chase fraud department on my phone, which wasn't even assigned to me. And they go, "Excuse me, is this Johnny whatever?" And I'm like, "No, this is his replacement, Michael Van Acker." And they go, "Oh, okay, please hold for the Chase fraud department." I go, "Okay." They go, "Are you aware that you have overdrawn the checking account ending in 440?" I'll never forget, by 3.1 million. And I go, "Nope, was not aware of that." And so that inauspicious start sort of launched a, had to go fix that really quickly. And I found myself in front of our billionaire octogenarian founder, Pat Ryan. And so I'm like, "Hey, by the way, you kind of got to write me a $5 million check like now because we're out of money." And he then was asking me about this M&A deal that was on our desk, his desk. And I'm so nervous and I'm book smart and I'm reading this off. And I realized when I was talking that, oh no, he like really was asking for my opinion and like was listening to what I said. And it was both terrifying, but also empowering that, hey, you get a few opportunities in your career and in your life. Being ready for that. If I wouldn't have read that pitch deck the night before, I would have missed that opportunity to kind of prove myself to Pat, who's still here every single day and still remembers that time 14, 15 years ago where little Michael at least knew what was on page 36 of some crazy deck. So again, seize that opportunity. And then finally, I'm sure you all hear this, but I see this very acutely. As someone who joined the firm at its near inception, there were a lot of folks that had come over with decades of experience. And candidly, a lot of those are still here. There is a huge gap in age, just in age, between them and where I sit and a lot of my peers at our competitors in industry sit. And a lot of us have been able to fill some of those gaps. And I see sort of the exact same thing repeating. And when I see how quickly our sometimes stodgy industry is changing, oh boy, do I get excited about the opportunities that you all can play in. And again, why I encourage you to find your passion and to find your specialization because it is not my parents, our grandparents' insurance industry anymore, where you send paper files, you stamp it, you go back and forth, and it's just basic auto home insurance. It is totally dynamic, totally different. And when I see vendors that are pitching me or partners that are pitching me, it's 20 somethings, 30 somethings with brilliant ideas where I'm like, oh my gosh, how do I use this for where we're trying to go? And I don't care if you're 25 or 65, if you have a good idea, we want to partner with you. And the faster that you can find what that is, the more successful I think you'll be. This is the two slides of the quick infomercial for Ryan Specialty and RT. So we sit in the E&S, the non-admitted space. We're not your State Farms. We're not your Allstates. We are the hard to place stuff. Basically, none of my friends and family understand what I do. I don't really even understand what I do. But I always use the example of, the house insurance, the car insurance. We don't want any of that. The more complicated it is, the more bespoke it is, the more it requires specialization, expertise. That's our deal. We talk about every ski lift in the world, RT insures. Why? Because a woman 25 years ago realized that there were all these ski lifts, they were falling over, there were claims all the time. She decided, I am going to be the world's experts in ski lifts. She redesigned them after a disaster 2 years ago. An insurance broker is telling these engineering firms how to do this to bring your premiums down, has written every ski lift in the world since then. Concussion insurance with the NFL didn't exist, couldn't price it, impossible. We solved that. We solved that. It was an issue. One of our very entrepreneurial brokers who has a sports and entertainment background had connections with the NFL, spent about 2 years understanding their problems, meeting with the players union, created a product that didn't exist before. convince these stodgy insurance industries, no, this is actually insurable and you can make a profit. We write all the NFL teams, we write all the NFL insurance. All that sort of stuff doesn't happen with someone just coming into their desk and doing the same thing they did every day. It comes from them seeing a problem, seeing an opportunity, taking advantage of that, doing right by the company, and frankly, their own pocketbooks, which is pretty cool. We always talk about how everyone is our client. You all are my clients. When I see chaos, when we see churn in the marketplace, we as a firm and us as a team really sees opportunity. If they're back to my partner in his speech before, it is the skid, it is the grease to get these things done. Venture capital. I was with AIG last week and they were talking about how they were trying to figure out how to price Elon Musk's renewable rocket refueling stations that are in orbit now around Earth that they haven't even built yet. They have to pre-insure that. I'm like, I need to go back to school to understand how to do that. That's what we're trying to solve and do on these items. And I talked about adapting and managing up. I've worked with a lot of individuals. You can't necessarily pick your boss, but you can choose how to represent yourself, and you can choose how to show up every day. And there are bosses and peers that I've had that I couldn't stand, but guess what? Some of that's personal, and you got to put that to the side. Some of that's just personality. Managing up, managing across, having that client service focus has served me and a lot of others in our firm quite well. I won't drain this. This is a little technical, but when I talked about Ryan's specialties sort of vision, we are all things complicated. We are all things E&S. We have a traditional wholesale broker who has a client such as an Aon Marsh Willis. We don't talk to the insureds. We don't talk to the ski lift company necessarily. We talk to their broker. And we are the intermediary of intermediaries. We sit in between that agent and that carrier. So our folks have to have an analytical mind to be able to understand how to underwrite and price a risk, and also a relationship mind to bring these accounts into the door. Tendeka, please.
Yes, so we do have a question in the chat box.
I see it.
Rachel Davis, he says, Michael, for those who might be newer to insurance, can you please define the meaning behind E and S?
Happy to. So the insurance industry, broadly speaking, and I'm skipping some few steps, but if you look at the top here, it says standard risks, which goes to an admitted carrier. So standard and admitted are relative synonyms. What does that mean? A lot of these are very highly regulated, either by the federal government or state governments. If you have a if you have a farm, or if you have a car, or you have a basic dwelling, a lot of those rates and a lot of those coverage forms are standard. And other than perhaps branding, speed to pay claims, it's almost like a commodity. Again, not interested in that. And respectfully, doesn't take a lot of expertise and know-how. Much more of a commodity, much more of a speed to market play, almost like a consumer good. What's the opposite of that? Non-admitted and E&S. Excess and surplus is the antonym of standard risk. These, it's kind of called the wild, wild west of insurance. There is no government that can regulate a concussion form for the NFL because it doesn't exist. We create it. So there's what's called freedom of rate and form. You can charge whatever you want. You can put whatever exclusion you want. We will insure your nuclear power plant on a fault line as long as you don't have purple doors. You can do that in the E&S marketplace. You can't do that in the standard marketplace. So everything below that, where you see these Ryan RT logos, is that realm. So thank you for the question, and sorry I breezed right over that and started using my acronyms. Okay. Oh, this is my best slide. I want to zoom out one more time when I was prepping for this yesterday. I'm talking about sort of the diversity of experience here, right? So I know very little about insurance. What has my value add been? My value add has been using more of the financial operational mind and carving out my niche that way. I'm an individual that has been able to build relationships with sales individuals and people in the marketplace, but my true value add is M&A, finance, some of that core items. Who do I partner with? Who do we have in our firms? We have cat modelers. So these individuals, we just hired a a meteorologist, believe it or not. Why did we hire a meteorologist? What are they doing in insurance? Well, they're explaining to us the trends in global warming. They're explaining to us the flood that just hit Wisconsin and Milwaukee and what have you. Why did that happen? What does that mean for the properties that we insure in that area? And more importantly, what's next? Does that mean we need to be charging 20% more, 10% less? Do we need to get out of this area completely because of the risks and the macro weather? I mean, again, I know nothing about this other than to understand we should put this individual into the room when we're pricing all these items. The 14 years that I've been with Ryan are somewhat dog years to where I've also seen some of these macro trends, and I would almost call them fads, industry-wide, economic-wide fads. It started about a decade ago with fintech. Fintech was a lot of the Allied Bank, Robinhood. Everyone's going to digitize and automate everything related to the banks and financial institutions. Didn't really impact the insurance industry. What was after that? It was insurtech, and it was they just used the same language. All this disruption, all this automation was going to come to the insurance agency. You were going to there was going to be the Amazon of insurance. Everything was going to be on Progressive. You just go to a computer and get your quote, and it'd be done. That didn't work. Why didn't it work? Because of everything I just talked about with the complexity and the dynamicism in our industry. So venture capital firms lit millions, if not billions of dollars on fire trying to disintermediate and to disrupt what made the insurance industry special, in my opinion, which was relationships, expertise, and knowledge, as opposed to understanding the insurance industry and figuring out what problems were there that they could solve. So fast forward, big data is a part of that. Everyone wants big data. Guess what? We have a ton of data. We don't know what to do with it. Why? Because we didn't start with what our problem was. So now I was very, in case you can't tell, I was very bearish on those sorts of fads. I feel very differently about AI. And again, I work with a bunch of boomers and octogenarians who really don't understand AI. I barely understand AI, but I understand enough about it to understand how revolutionary this is and can be. I pulled this on one of our internal decks that we look at, and you see sort of the questions on the right that we're asking ourselves every day. So another point where I don't know the first thing about this, and I don't expect to be an AI expert. What do we plan on doing? We plan on you all who have been using this in high school and in college and in your daily lives to raise the industry and help us to understand where we can deploy this and and really get us the outcomes that we want for our clients and our market. So some folks are scared of AI, especially those of a different generation than me. I'm scared of it, but I understand it. And instead, we need to embrace it. And we need your help on that. This is
So
another one that
we
yeah,
yeah, we have a question in the chat box from
please.
Paul. Paul, do you feel comfortable enough to unmute yourself and ask?
Yeah, I can.
Go for
Um,
it.
my question was just out of curiosity, from an underwriting perspective, which emerging risk, cyber, climate, or something else do you see most reshaping the specialty insurance market?
Great question. Okay, so here's a perfect example. Cyber insurance, cyber crime did not exist in my when I started my tenure at RT. That emerging risk cyber, that's already done. That's already been figured out. RT was fortunate enough to an individual younger than me, was on one of our professional lines teams, understood cyber crime. Again, he's in his mid 20s at the time, decides to learn every single thing about this as an insurance broker, become basically create cyber insurance for the marketplace, for the world, becomes the largest broker at RT, becomes the largest wholesale broker, arguably in the history of insurance, and is still doing that now and is a leader in our firm. And now it's over. We have the forms, it's priced, it's now a commodity. We're on to the next thing. So my sort of exit from your question is I don't even know. Like cyber's done, climate for sure, because I don't think anyone knows the impact of that other than knowing that it's going to impact our world. But I normally do a thing where I pull up the day's New York Times headlines and I tick through and go, that's related to insurance, that's related to insurance, that's related to insurance. And guess what? Almost all of them are E&S. I actually think AI is another one where I got pitched a couple months ago. No one's really deploying AI yet. We're trying to create AI insurance. How do you create AI insurance for something that doesn't exist and you don't know what it is, and you have rogue chatbots that you haven't even launched yet? I think that, to tie that into here, is probably the next frontier outside of the more traditional, political economic, socioeconomic factors out there. But great question. We're going to skip through here. Another one where I kind of talked about how we really want our AI strategy to come top down is really more visionary, but candidly, our board of directors, our leaders, the direction I get from them is go do AI. Okay. The, what does that mean? How do we weaponize that for 4,000 employees that we have? And really, what problem are we solving for our client is what we care about. And so I look on the left in terms of subject matter and employees. We are dying as an industry to find these folks. We want the smartest folks not to go to Google, not to go to ChatGPT or Alpha or Meta or whatever. We need them in the insurance industry. So perhaps your highest and best calling is a traditional retailer, hotel, or wholesale broker. Maybe it's an underwriter and you want that path. Cool, we'll take you as well. We want data scientists, engineers, someone who can figure out the next ski lift that's breaking that's in the insurance industry, meteorologists, AI experts. That's where I'd encourage, and it doesn't have to be a one size fits all, right? If you, my history has been I was finance and insurance. That was a pretty compelling path for me. You put someone in front of me that has an AI expertise or interest and an interest in insurance, oh my gosh, the world's your oyster in terms of where you want to go, whether it's in our firm or somewhere else. And then this is another internal item. This is a little technical, but this is where I'm sort of zooming out here in terms of how we're thinking about AI, APIs, some of these items. And if this goes over your head, do not worry about it at all. But the insurance industry, as someone who's been seen a lot of different companies, some of which we've purchased, some of which we've passed on, the core insurance operating systems are all terrible. They were all built in the 80s and 90s. They're a waste. When I talked about the insurtech bubble and all the money that was spent on that, it was misguided and it was meant to sort of replace a lot of these items. That's not compelling. That's not industry changing, paradigm shifting, whatever consulting term you want to use. What we're thinking about is how do you use AI? How do you use some of these other items to plug into this infrastructure that it's not worth it to rebuild? It doesn't really matter. How do you take again, a chatbot is a very simple example, but how do you take that and deploy that to your clients and to your workforce to make them more efficient? And we are not viewing this as like a headcount reduction play at all. We're in the client service business. There is all this business out there of which we capture a sizable, but a portion of. We want our folks to not spend any time on those stupid systems and items where you're entering a bunch of data. We want to take that off their plate completely so they can spend more time with their clients, with the industry, coming up with the next cyber insurance, the next AI insurance, what have you. Our bet and our goal is if we deploy that correctly, we unleash the intellectual capital that we have in this firm, in this industry, and upscale that. That's the opportunity that I see. And again, that's broader than Ryan's specialty. That's where we need your guys' help on that journey to challenge us and make sure we know what we're talking about. Because this all looks great on a slide. How do you deploy that? How do you change an industry? Something I am pretty passionate about. Okay, then I'm going to take a sharp pivot then wrap it up for any questions. So to bring this full circle, we talked about, the world, the insurance world, according to Michael Van Acker. Against my better judgment, I gave you some advice and how I didn't think about specialization and expertise the right way to start. And then I talked about like building your brand, seeking out mentorship and leadership. This is something that drives me crazy every single time. And I use this slide with our internal interns, our individuals at the Ryan University, and what have you. When I said that no one will care about your career more than you, even if you have the best mentors, the best leaders, the best team, no one's going to care about your career as much as you do. This is a slide that shows why people have left the insurance industry. I think this is 2 or 3 years old. And this one drives me crazy. I have zero problem. We talk about work-life balance. You want to move somewhere else. You have a wrong fit. Totally get that. As long as you haven't burned a bridge, as long as you have relationships, I'll help you find that if I can help at all, because I care about our people and want you to find the right place, right? Hey, it's not a cultural fit, made a mistake. I only like working on Tuesdays, whatever. That's cool too. I don't have a problem with that. I have a big time problem if more than half of our industry and our firm is leaving because they don't see career development. I just spent 50 minutes after 10 cups of coffee getting all fired up about all the opportunities in the insurance industry, in our firm, and in others. And if folks, especially young folks, do not see career development in their path, we've failed. We've failed as an industry, but back to what I said before, so have you. Why have you not explored, if you're in a firm and you're in an industry and you're not challenging the status quo, you're not following the rule of three, you're not exploring an interest or shadowing a different department or finding out what's out there, shame on you as well. Because again, the insurance industry, which I initially just thought of premium pricing risk, is so much more diverse. And I would argue that there are few industries that have that level of diversity of opportunity to deploy whatever it is that you're passionate about or can make an impact on. So when you all are in my seat and presenting this slide in like 5 years, that number better be like 10%. And it could be work-life balance or retire. Actually, retirement will probably be like 40%. So, that's where we also need to all step up there as well. So anyway, thank you very much for indulging me. I hope you got even a little something out of this. And I also hope you hear sort of my passion and my interest in this. And I love seeing all of you. When I did not realize when we were prepping Tandeka, she let me into the room and it was just me and her. And the way that our teams works is like everyone sits there and you could see them. And I was like, is no one showing up? And then she hit the button and you all showed up. So I'm glad I at least had 40 people to listen to my drivel. So I appreciate it. With that, any questions, comments, criticisms, bring it on.
Amazing. And please feel free to jump in. You can use the raise hand feature if that's easier. Click the button and feel free to just unmute yourself and ask anything you'd like. We have about 8 minutes. Paul, go for it.
Hey, Paul.
Okay. Um, when training new underwriters, what qualities or skills distinguish those who excel early from those who take longer to ramp up?
Yeah. I think if you're talking about an underwriter, there is an expectation of a bar of technical capability. And some folks come with that straight out of school. Again, my school didn't have an insurance RMS program at all. And some of individuals from my school have been very successful in the insurance world. So there's a ramp up period regardless of what that looks like, right? Then, if that's 2 months or 24 months, you're going to have such a long career that doesn't really matter. I think it goes back to sort of the core tenets that I talked about before, which is how do you take disparate information? How do you perhaps look at that in a different way? Underwriting is a lot of judgment. You could look at this one way and say this is a great risk. You could look at this the other way and say this is the horrible risk that we're going to take huge losses on. How do you it's a lot of synthesis. How do you synthesize disparate point of view, add your own view on it, your own value to it, and then rely on the mentors and senior underwriters there to be adaptable to their feedback. Hey, underwriters make mistakes all the time. I make mistakes all the time. But the ones that you're going to have losses. Hey, when we wrote this account that we thought was good, that had a huge loss, did we miss something or did we just get unlucky? If we got unlucky, keep writing them. You're going to write 10 more and you're not going to have a loss, and you should double down on it. If you miss something, you better figure out what that is before you start writing 10 more and all 10 have a loss. So that sort of real-time interaction and getting that feedback and incorporating it, I think is key for an underwriter.
Thank you.
Of course.
Great question. Claire, go for it.
Hi, so I'm mostly studying actuarial science, and I was wondering if there's like space in the ENS market for actuaries, because from my understanding, or like at least what I worked on this summer, it was mostly like the really um like not specialty things like auto home stuff. Is there like room?
Wrong. Wrong. No, that is one of our huge value adds as well. So again, not to go too deep on our firm, but the way that I defined the industry before, and when I talked about there's wholesale brokerage, candidly, there's not a lot of actuaries that RT, that's the wholesale brokerage side, uses. We have a sister company that is all the underwriting managers, MGAs, MGUs. What is that? That's a big carrier like an AIG who is so big, they don't have time to become experts in ski lift operators. What do? They outsource that to us to do the underwriting and to understand that. So AIG basically says, okay, you can write ski lifts. It's got to be less than $10 million in limits. We don't want to write in South America, but you're such a good underwriter, knock yourself out other than that. They also outsource the actuarial work to us. They don't want to have an actuary who knows what that is. We'll pay for that. So here in Chicago, I think we have 40 actuaries running around here. And our whole point and why we've grown so quickly is because we can then, it's our favorite thing to do. We go to a carrier and we go, hey, concussion insurance, don't even hire the underwriters. We already know it. You trust us. You trust our brand. Here's the 10 actuaries that have already done the work for you. Just give us a bunch of money, say yes, and we'll make you a bunch of money. That's how we do that in the ENS world.
Thank
So
you.
send me your resume and you can come on over to us and you'll see how good actuarial services are on ENS.
I love that. Great question. So we have about 3 minutes left. If anybody else, yep, go for it,
Paul's
Paul.
double dipping. I love it.
Yep.
If you were starting your underwriting career today, how would you approach building an enterprise or expertise in niche markets and specialty lines?
Yeah, so it's sort of the same thing that I said before, right? Like it's gonna sound like I'm talking out of both sides of my mouth, but I'm really not. You need to look in your mirror and you need to ask your mentors when you've reached that capacity of the bar that I described, right? You need to understand how the insurance industry works. You need to understand client relationships. You need to understand forms, affidavits, ENS regulations. You could get that anywhere, writing whatever line you want. So I do think that to me is like almost like the apprenticeship of what I see for a successful underwriter that takes 1, 2, 3 years. Again, I don't care if that's property, casualty, cyber insurance, NFL insurance. You're going to get to that point. Once you realize that, that's when I would recommend you find that specialty and you start to go deeper. And you have to ask yourself, what am I into, right? I described how my kids are broker versus underwriter. Well, you could go deeper than that and go, okay, the underwriter, is she a property broker or casualty broker? There are folks that could tell you in 15 minutes if you're a property broker or casualty broker, just the way you think in your mindset. And so if you land with the right firm, with the right mentors, they will help guide that to you. And someone else was even asked, it was one of our interns was saying, because I was on my same spiel, they're like, all right, well, am I an underwriter or a broker? I was like, well, I can tell you what I think you are. And it was sort of the same conversation. She's like, I'm so nervous if I pick the brokerage side. What if I make the wrong decision? And I kind of said the same thing, which is the rule of three, those first 2, 3 years, it doesn't really matter if you go to broker or underwriter. You got to just understand the industry. You're going to have a different perspective on one or the other. After you get that, you're going to know way more where you land, whether it's a line of business, it's a broker or an underwriter or overhead corporate like me. That's how I would encourage you to, again, to apply that to sort of the rule of three.
Thank you.
Fantastic. And with that, we are at time. So if you would all join me in a virtual round of applause for Michael.
Back to you all.
Yes, thank you so much again for being here with us today, for hanging out with us for an hour. I saw lots of comments in the chat box about how appreciative everyone is, how insightful and engaging this session was. So we absolutely appreciate you and the energy that you brought to this session. It was amazing. So for all of the students who are here with us, as mentioned, we host these sessions on a weekly basis. So I will catch you guys next week, Thursday. That is August 21st. Our hosting company is going to be XXL, and we're going to be talking about the excess and surplus lines market again. So this is a fantastic part A conversation, and we'll go deeper into it next week. So
And I
thank you
know
all
Tim
again.
very well, so I looked at that. So I don't know if he's going to bring as much energy as I did, but you're in good hands on that.
It's not a competition, Michael. It's not a
I know. Sorry,
competition.
sorry, sorry.
No, thank you so much. You appreciate it. Enjoy the rest of your day. I'll catch you guys
Appreciate you all.
later.
Take care.
Thank
Bye.
you.
Thanks, Tandeka. Bye.
Thank you.